Retail investors just love IPOs. At the back of the mind, there's always this idea that you're entering at the ground floor and things can only go up. Now, the past has shown us that that's not necessarily the case. While there were some blockbusters in 2020, there were others which were maybe overvalued or not that exciting for investors once they actually listed. So what would be your guide to approaching IPO season, so to speak, and picking out winners?
Well, I would say don't invest in IPOs. And the reason being because all the reasons that Mahantesh said, that, retail investor doesn't have any way to figure out these companies' financials. I mean, I know the financials are available, but how many retail investors can actually understand these financials, and how many of them can really think about how these companies are going to do in the future, and are they going to be sustainable as well? So, a great product may not necessarily be a great stock. And I think a lot of the investors who are doing IPO are thinking of these quick listing gains. There is this huge FOMO factor that's also there. So if you've missed out some of the other IPOs, there's this big FOMO factor of missing those out as well. To my mind, I think that a retail investor, and in any case, the allotment is not really very great given the number of times it's getting oversubscribed. So I think a retail investor is actually better off putting a money in a mutual fund and letting a professional fund manager actually decide which IPO to go in for.
Yeah, Mandesh, you want to comment on that? Do you agree with that point of view?
Yes, to some extent, because what has happened is that for the retail investor, an IPO allotment is more or less like a lottery. You get it or you don't get it, right? And yeah, for those a little above the retail category, which is the HNI category, the allotment is proportionate basis, and therefore, given the large oversubscription, your actual allotment is very small. Therefore, the best strategy would be for retail investors would be to actually look out for quality names within these companies and look at bargains on the listing day itself, because you have on one hand on the listing day a pre-opening market where the stock typically the pricing or the price band is opened up and it's free to move in irrespective of a price band. And post-listing, there is a 20% kind of cap. I think there is enough headroom available to make your gains during that period, not just wait for the listing pop-up, and need not necessarily go through the listing process. The only good news about for retail investors is that since you have an ASBA kind of application, you're not really committing your money full-fledgedly behind the IPO, and the money blocked is just for a few days. So that's the good part. But listing day, you can hunt for bargains is what the theme should be.
Mandesh, also your take on the way some of these issues are priced. Are they priced fairly, you think, or are they taking into account the atmosphere we're in, where markets have run up a fair bit and you have new blood in the game, so to speak, because you have a fresh load of retail investors who are keen and looking for opportunities?
So IPOs have a valuation justification. If you go through the document, right, that is a justification provided for the valuations. And very often the justification is based on peer valuation. That means peer companies trading in the market. And when you have the market already trading at high levels, at high valuation levels, obviously the valuation of the company that is hitting the IPO market will be high. So there is an inherent disadvantage that we see in the IPO market, because most of the IPOs will come when the market is so-called hot. When we say hot, it means that valuations are stretched. So from purely a fundamental perspective, that's not the time when retail investors should be investing in an IPO. Therefore, the study behind in terms of your financial prospects, outlook ahead is very, very important. So having said that, IPO do come during market highs and market peaks, and we just can't help it. Is there fairness in that? Probably the fairness would have come if the price band would have been much wider than what it is now. But on the other side, on listing day, the price band is not capped, so investors can take advantage of that pre-listing pre-listing trades that happen.
All right, so it's going to be an interesting time going ahead as the IPOs come in. Mrin, since you think that retail investors should avoid IPOs at all, do you have a view on the ones on offer right now, or you're not looking at any of them at this point?
No, I just do not recommend them because, the point is that even if it has a great listing, the point is that the allotment, in absolute terms, the amount of money that you're going to make may not be too much. And, the point is that how do you tie this in with your overall portfolio? I mean, you've got most investors who haven't even got basics covered on financial planning. So where do you tie in this piece with your financial goals? So, my view is that a retail investor should really stay away from these IPOs. And it could be a great IPO. All I'm saying is that I just don't think that they have the right information to make a call on whether this is going to be sustainable or not. And that's why I feel that, they should just be in other investment vehicles like mutual funds, which will make that call for them.
Yeah. Anyway, the call is up to you, the viewer, to see what works for you. We're giving you all the points of view possible. So thank you so much, Mrin and Mahintesh, for joining us on this chat today.